Tesco, every little helps goes way beyond helping with your shopping. A little help is supporting Race for Life for 19 years.
Turning unused land into a community garden.
Or supporting those affected by homelessness in Manchester.
It's 100 million pieces of fruit, given away free to kids.
A little help makes a big difference. Tesco, every little helps.
Pays a lot in taxes.
Well, I think then if he wants to show that he's paid a lot of taxes, he's going to have to produce some documents to prove that. I haven't heard him actually dispute any of the numbers in the Times reporting, and they are very precise. They're right down to the penny in some cases. Now, they didn't just create those numbers, so I think they are accurate. And if he wants to refute those numbers, then he should step up and maybe finally just release these tax records. I mean, what's the point anymore? Maybe he says he paid a lot in state tax. Okay, reveal your state taxes and let's see how much you paid. So I think he is going to be under pressure. I mean, Biden should certainly hit him on the notion that he can't release these because they're under audit. That is not
gets a right to basic
the case. He absolutely free to release his taxes, as other recent president has, if he wants to. I think beyond that, I don't expect there to be a whole lot of focus on this. I mean, it only verifies. I mean, Trump will say, "Oh, look, I'm just a smart business person, and that's what you elected me because I know the tax code and I'm only following the rules. If there are loopholes, then I'm just taking advantage of them." But this is an extraordinary situation where he basically wrote this tax code. His administration wrote it. He could have closed those loopholes. So I think Biden should probably take him to task for some of the glaring injustices in the tax code which remain.
We'll see where this leads, Jim. Obviously, far from over. I got to ask you what your reaction was to that preliminary injunction on TikTok's ban last night.
Well, I wasn't all that surprised. I think the administration is going to run. The TikTok is not just like any other business. It is a form of communication. It is a form of speech. People who use TikTok are expressing themselves, and there is a long and deep tradition in this country of protecting freedom of speech, and particularly it is very difficult to prevent speech before it happens. And I think this is something that the reality the administration is running into, and I don't see any easy way for them to get around that. If they're going to argue that free speech has to be curtailed in the interest of national security, they're going to have to step forward with a much more detailed and convincing case about why this is such a threat to U.S. security. I think it's a very tough argument given the First Amendment.
But Jim, working against that, isn't there just very, very broad CFIUS powers in terms of figuring out what's okay in terms of foreign investment? I mean, do we have rules that block, for example, foreign ownership of TV stations and things like that? I mean, where does that come into play?
Financial panic and a distressing scenario would unfold.
Well, it's one thing to oppose foreign ownership. It's another thing to try to block the users. It would be like saying, well, you can't turn on your TV. Or TV's a little bit different because you receive it. But everybody, in the internet has the ability to express themselves on it. So to try to stop the users is what's going to be hard. They have a lot of room to negotiate the ownership structure as long as it does not impede the ability of TikTok users to express themselves on the platform. So that is the needle they're having to thread. They've gone far too broad here by trying to enjoin the operation and to try to stop the users. This fight really should be from the owner and the government, not the customers of TikTok.
Jim, examining China's actions in different parts of the world, whether it's this disputed border with India, building a military presence in and around South China Sea, that would suggest China's being extremely aggressive. Is it wishful thinking to expect Beijing and Chinese officials to ultimately approve this TikTok deal with Walmart and Oracle and allow these two U.S. companies to control the source code that manages U.S. customer data?
Well, I think it's that's going to end up being a largely, financial decision. I mean, if they can't have the U.S. market in TikTok, if they ultimately are banned here, that's going to severely curtail the financial prospects of TikTok. Now, China may not care about that, and the security issues there may loom much larger, or the idea that they're not going to give in to U.S. pressure. I think that's something that you'd have to peer into the minds of the Chinese leadership to see. But I do think it is a real risk that when all is said and done, China will say, no, we're not going to.
Of the United States.
But she was wrong. Let this out of our hands.
Hey, finally, Jim, we've been asking people not just on the heels of this particular ruling, but just as the deal has come together, to the degree that it has come together at all, whether there is a dampening effect on cross-border M&A, whether executives who see opportunity back off because of the heightened now risk of approval and clearances, to the degree where it's really just come down to the opinions of two leaders in the world.
Well, that's certainly true if you're dealing with anything that has to do either with national security issues or internet issues, and obviously the two have blurred. I mean, we have a long history of difficulty with the U.S. technology companies penetrating the Chinese markets. I mean, going back to Google's efforts, Facebook. I mean, it's been a very contentious area for long.
It's been very hard for Republicans to get much of anything done.
I don't think that's it, but I think a heightened level of hostility, this ongoing, very public war over TikTok will definitely have a chilling effect, not just on M&A, but on U.S. companies trying to gain greater traction in the U.S. market, which is kind of ironic because one of the main goals of putting the tariffs on China was getting them to open their markets up more to U.S. companies. But now it looks like all of that, there's a cloud over all of that, because the minute you have U.S. companies operating in China, you have the potential of China gathering additional data on U.S. citizens.
Somebody who can regularly get 60 votes for initiatives in the Senate.
Jim, thanks so much. Good to talk to you as always. Jim Stewart on two very big stories today.
Carly, is it time to get bullish on the cruise lines? Names like Royal Caribbean, Carnival, and Norwegian all down more than 50% since the start of the year. But have we reached a bottom? We're going to debate that next. Don't go anywhere. Squawk on the Street returns in 2.
We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow @TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession.
With the latest update to the TuneIn app, your search bar gives you more control than ever before. Now, in addition to standard search, you can view and edit your history, browse what's trending with other listeners, and explore custom picks just for you. Search and discover on TuneIn.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
College football is back on the field.
He's gonna go in, touchdown!
And TuneIn is your ticket to the game. Listen to live play-by-play, pre- and post-game coverage, college football podcasts, and in-depth analysis of the biggest stories around the sport.
We want to play football.
Best of all, it's free.
Barkley motions into the backfield. McSorley fakes to him. Instead, into the end zone. Touchdown!
Search college sports on the TuneIn app to find your team and start listening.
To keep you and your loved ones safe during the coronavirus pandemic, TuneIn has the latest guidelines from the CDC. Wash your hands often for at least 20 seconds. Avoid close contact. If possible, maintain 6 feet from people who are sick or non-household members. Cover your mouth and nose with a face mask when around others. Clean and disinfect your area and make sure to monitor your health daily. For the latest stories and news updates on COVID-19, search Coronavirus News.
Wish you could catch up on the NBA playoff race in 30 minutes or less? The NBA Daily Ding is your quick, comprehensive daily rundown of the NBA.
Just keeps it again against Forbes. He'll shoot a deep three.
Let the Athletics team of NBA experts
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. In Northern California, 2 more wildfires triggering evacuation orders. The Glass and Zog fires have already burned roughly 10,000 acres. Across California, more than 17,000 firefighters are battling wildfires. Heavy fighting between troops supported by Azerbaijan and Armenia over the disputed region of Nagorno-Karabakh. Dozens of deaths have been reported, though actual numbers are disputed. Several nations have called for the two sides to return to the negotiating table. India has now confirmed more than 6 million cases of the coronavirus. This is the worldwide death toll from the coronavirus approaches the 1 million mark. And a new study shows people under the age of 20 years of age are 44% less likely to get COVID-19 than adults. British researchers analyzed 32 other studies to come up with those results. You are up to date. That's the news update this hour. Seema, I'll see you back here in an hour. Back to you.
Sue, thank you. Cruise stocks have been crushed during the pandemic. The CDC putting into place a no-sail order back in March, and ships have not been able to sail since then. That ban now set to expire on Wednesday, although many expect an extension to be announced this week. Is now the right time to get back into the cruise names, which rallied 10% on Friday. Truist Patrick Scholes and CFRA's Tuna Amobi joining me now to discuss. And Patrick, I'll start with you. You really have to have a stomach for volatility in order to invest in cruise lines and also part ways with traditional valuation metrics. I mean, these are some of the most highly leveraged names on the S&P 500. So do you think the recent gains we've seen are justified?
I will tell you right now, Seema, the only certainty is uncertainty with these names. I'm of the view that it's going to be a much longer and slower recovery than folks are expecting. Certainly, we saw the names jump up significantly at the end of last week in anticipation that you might have some cruising sooner than later. I'm of the view that the CDC will extend the no-sail order for at least 1 to 2 months. But we anxiously await it because we're running at about 48 hours until that current one expires.
Yeah, Tuna, earlier last week, the cruise line submitted a list of 74 recommendations to the CDC, which includes testing for all crew and passengers, shorter itineraries, the use of private islands, and also limited excursions to ensure that passengers don't contract COVID when they get off at a port. With that said, do you think all of this is enough to win the approval of the CDC?
Tell him I will remember those.
You know, Seema, I was going through that same.
Tuna,
I was going through that same list.
Your views of Islam.
I was going through that same list, and it was pretty clear.
Western capital and proud of it.
It's going to be a very different world for cruise customers. The protocols are pretty intense. And back to the earlier question, I wouldn't call an inflection at this particular point. I think there's a whole lot of things that's got to happen for the consumer out there to be comfortable getting back on the ship. We know that the clock is ticking for the no-sale order. If anything, just the CDC letting the no-sale order expiring, I don't think necessarily indicates that we're going to get back to normalcy anytime soon. As far as the stocks themselves, I think we know that they have become even more leveraged than they were as they continue to try to navigate the liquidity pressures. So at this point in time, Seema, we're still pretty neutral on those shares, and we think that this is really not a time to try to amass your positions pending all these issues.
Patrick, how are you thinking about this industry if you project a little bit farther ahead? And there's one school of thought that says there's going to be obviously pent-up demand for all kinds of travel, and there's going to be a real release of that demand some point in the future. On the other hand, this industry already had maybe some demographic issues, people not taking to it as quickly. So what do you see for the further future here?
London was attacked by
to like these stocks here, you really have to value them on 2023, maybe 2024 estimates. And I think during that time, or at least over the next 6 months, I think you're going to be more disappointments than encouragement. And what worries me a bit is many investors, especially Robinhood investors, don't have 3 to 4 year time frames. So if you got 4 year time frames, which most of my clients, I would say probably don't, especially hedge funds. I see more risk than reward, at least over the next year.
A decade after the attacks, Khan ran for mayor of
Hey,
London.
Tuna, when you see headlines cross from the companies that say that bookings for next year are trending above historical norms, I just wonder, what do you think is the phenomenon behind that? Are those passengers who had reservations pre-COVID and are simply deferring on the hopes that maybe one day this will work out again? Or is this actual people making a bet, putting a fresh reservation online because they think this is going to work?
He shared a platform. Carl, I would take those advanced booking numbers with a grain of salt. I mean, right now we know that the consumer is booking much closer to travel dates. And inherent in those bookings, a lot of people that were giving credits for previous bookings, and they're cashing in on those credits with a lot of flexibility for cancellation built in. So while the companies are saying that the numbers are coming in within historical norms, we know that doesn't necessarily indicate that the people will get on board the ships under these new safety protocols that we talked about. And more importantly, I think the profitability of these companies are going to get squeezed even more because there's a whole lot of costs that are now kind of built into the business, while the companies, as we speak, are still burning anywhere from 160 million to even north of 200 million on a monthly basis projected cash burn. And that is set to continue over the long haul, even if cruise gets back to any semblance of normalcy. So there's liquidity issues that they still have to be dealing with, and I think that we could be looking at a potential recovery that could stretch well into 2022.
Yeah, speaking of liquidity, Patrick, you've seen all three cruise lines downsize their fleet and sell a lot of their ships. There was a Holland America ship that was worth $120 million at the beginning of this year, now worth $10 million. I mean, how concerned should credit investors be about some of the debt that they've bought that is backed by these ships?
Well, unlike, say, hotel real estate, there is no underlying land value. I don't know if this should be dramatically concerned. We're going to get a vaccine. You're going to, by the end of next year, you're going to get some return to normalcy, start to get some cash flow. Certainly, Seema, what we've seen so far is the capital markets and investors also over the last several days in the equity have been very accommodating to these cruise lines. So I'm not overly worried about these companies going bankrupt anytime soon. On average, they have 13 to 14 months today of liquidity in a no-sale environment. But again, the capital markets are open, granted not cheaply, but are open for these companies to raise additional capital.
Yeah, that interest rate of 10 to 12%, that's certainly got to bite at some point. But Patrick and Tuna, thank you for joining us today to share your expertise on this sector. Mike.
All right, as we head to a break, a programming note, get ready for Delivering Alpha on Wednesday. It's back for a 10th year. Go to deliveringalpha.com to learn more and register. We'll be right back. S&P up 1.5%.
Another commercial. Maybe it's time you tried TuneIn Premium. Experience a better way of listening with dozens of non-stop music channels, commercial-free CNN, MSNBC, CNBC, and Fox News Radio, and unlimited live games from the MLB and more. Search Premium to upgrade today.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow @TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession.
Where's your HQ for the latest golf news? On the Golf Central podcast, GolfCentral.com writers discuss and debate the biggest stories in the game, from the PGA and LPGA tours to the amateurs.
You look at his history on the type of golf courses, is what you're saying.
Yes, right? TPC Boston has been very favorable over the years to long hitters and ball strikers. Bryson won there the last time TPC Boston hosted a playoff event in 2018. You head next week to the BMW Championship.
Search Golf Central on TuneIn to listen.
Got a go-to podcast for following the NBA playoffs? On The Haber Show, NBA insider Tom Haberstroh sits down with some of the biggest names in basketball to share the stories and the numbers behind the biggest games and biggest moments in the league.
With the man that everyone wants to see this weekend, Aaron Gordon. What's going on, man?
Tom, man. Here we are, man. What are we doing?
Any props? Have you been training with any props? Stuff the Magic Dragon?
Not this year. I think I'm
Search The Haber Show on TuneIn to listen. These sponsors.
Wells Fargo top strategist Chris Harvey says it's too soon to put new money to work. Find out when he'd be ready to jump in on tradingnation.cnbc.com.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the favorites tab.
Take either a lot of
Ready
people,
for the inside
thousands
scoop on
of
the
hours,
NBA
or
postseason
massive
race?
But for Julian Assange,
On the
all he
Hollinger
needs
and
is one
Duncan
room,
NBA
an
show,
internet
basketball
connection,
insider
and the
John
world will
Hollinger
listen.
and Dunked On podcast host Nate Duncan join forces to bring you the smartest
Assange is
weekly
located
NBA
here,
podcast
and
on
more
the court,
specifically,
featuring
right
next
here.
level
And
analysis
from
of
that
the league,
location,
its
he's
teams,
posted
and
government
its
secrets,
players, all the
classified
way to the
documents, and
NBA
leaked
finals.
emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious
covering
people
everything
in the
from
world.
MLB history and operations
Born in
to interviews with
1971
players,
in Townsville,
agents,
Australia,
owners,
Assange
scouts,
has always been
umpires,
on
and
the
beyond.
Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16.
Welcome back. Still no deal in Congress on a new coronavirus stimulus package. Our Eamon Javers has the latest.
Where he
Eamon.
studied programming, physics, and mathematics.
Yeah,
He
no
never
deal and no
graduated,
real
but that doesn't
sense
mean
now
he didn't get
as
an
to where we're
education.
going this week. Nancy
By
Pelosi, the Speaker of the
1991,
House,
Assange
was
hacked into
on
the
CNN
Pentagon,
yesterday, and
US
she
Navy,
said that
and other branches of the
negotiations
US
are
government.
going to continue
In
this week, and she
1996,
said
he was caught by
Democrats
the
are going to
Australian
continue to push
federal
forward
police in charge
with that
with over 30 counts of
$2.4
hacking
trillion
computer-related crimes.
proposal,
He
maybe
didn't get any
in
jail
bill
time,
form for
but
a
he was
vote on the
fined
House floor, although she said
$2,100.
what she would prefer to get out of all this is a negotiation with Treasury Secretary Stephen Mnuchin and ultimately a deal with Republicans that could attract some Republican votes and actually get it through the Senate and signed by the president. They hope to do that this week. We'll see where that goes. The negotiations just have not been very encouraging for people who want to see another stimulus so far. We'll see if they can break the logjam this week. And there are a lot of potential things hanging over this debate and this negotiation this week, including the presidential debate that's tomorrow night. That could change the political dynamics. If there's a real breakout performance for one side or the other, that could reframe the calculation. Of course, there's the government shutdown looming. The expectation is that they'll be able to come to a deal to have a continuing resolution to kick that can down the road. If that deal were to fall apart, that might play into the overall stimulus negotiations as well. And then there's that fight over the Supreme Court. Republicans have said they're going to push forward with hearings on the president's nominee as early as October 12th. There's a lot of emotion around that, and there are a lot of Democrats and folks on the left who say that Democrats should shut down everything up on Capitol Hill in order to protest the president moving forward with a Supreme Court nomination so close to an election. If that dynamic changes and that idea takes hold in the Democratic Party, that could also impact whether we see a stimulus bill or not. But as of now, Pelosi says she's going to push forward. We'll see whether negotiations can yield anything. They certainly haven't to date.
Interesting. Just off the highs of the day, with just 36 days until the election, Eamon Javers with the latest on where talks about stimulus stand. Heading into the break, take a look at shares of Caesars and British bookmaker William Hill. Those companies in advanced talks on a takeover offer that would give Caesars full control of William Hill's U.S. sports betting and online business. Announcing today that Caesars was considering making an offer of 272 pence per share. Squawk on the street. We'll be back.
Those leaks were just the beginning. They went on to post more than 90,000
Did you know
leaked
that with
documents
TuneIn's
known as
local
the
radio
Afghan war
feature,
logs,
you can stream live FM and
390,000
AM
documents known as
stations
the Iraq war
broadcasting
logs,
in your
and
area?
250,000
Discover
private
local
messages
news,
between
talk, and music
diplomats called
stations
cables
navigate
in what
to
is
the
now
local
known
radio
as
section
Cablegate.
under Browse to listen
These
locally
leaks were
on
met with
TuneIn.
very real
We're
ethical
all guilty of
questions.
spending
The
too
problem
much time
with
on social
publishing
media.
those cables
Why
was
not
that a
add
number of
something
confidential
genuinely
sources
useful
from
to your
US
feed with
diplomats
TuneIn?
faced
Follow
real
at TuneIn
danger
on
when they
Facebook,
aimed for
Twitter, and
establishing
Instagram to learn about some
Then
of the best
Secretary
stuff
of State
happening
Hillary
around the
Clinton
app. You
drove
might
the
just
point home
discover
that
your next
every
audio
country,
obsession.
including the United States.
Hey, it's Sarah Spain, one of the
must
panelists
be
from
able to
ESPN's
have
Round the Horn.
candid
Did you know you can listen to the show whenever
about
and wherever
the
you go
people and
on
nations
TuneIn?
with
That's
whom
right.
they deal.
Hear the Around the Horn
Shortly
cast
after
competitively
Cablegate, the
debate
Swedish
the
government
most
issued
heated
an
issues
arrest
in
warrant for
sports.
Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied.
Live
Either
on
way,
ESPN
Assange's
TV
next
or
move
anytime
was
as a
seek
podcast.
refuge
No
in
TV
Ecuador
required.
and embassy,
Just search Around the
which really
Horn
was
on
the beginning of the
TuneIn
new
to listen.
chapter in his life.
Not sure what to listen to next? Well, here's this week's top three
What was
things to hear.
supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Sounds perfect for sweater weather. Featuring artists like Nora Jones, John Mayer, and more. Find these and more trending audio on the homepage of the TuneIn app.
For a free quote, visit SirPro.com.
WikiLeaks released 20,000 confidential Democratic National Committee emails.
Without bias.
In terms of the presidential race, it's my right here when Assange released the first batch of emails.
The
Trump
facts,
actually
the
takes his
truth,
first lead
the
against
news with
Clinton.
Shepard Smith. Premieres Wednesday, 7 Eastern, CNBC.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk
From the
radio
emails,
and
we now know
podcasts,
Hillary
along with
Clinton's
important
campaign manager
breaking
makes
news
risotto.
updates.
And also how the DNC
Get the latest
squashed Bernie
breaking news
Sanders'
alerts
campaign.
and listing
One thing
suggestions
we
for
don't
news
know
stations
is
and
who
podcasts.
gave Assange the
Let
stolen
TuneIn
emails
keep you
in
in
the
the
first
loop with
place.
push
Many
notifications.
leading Democrats
Just go
say
to your
the
device's
suspect
settings
was
and allow push
They released
notifications from
analysis from a
TuneIn to
private
get live alerts and
cybersecurity
recommendations
firm
on
that
the
said it was
audio
a-
you want to know
But
about.
Assange claims
We're all guilty of spending too much time on social media. Why not add something genuinely useful to
So
your
this is
feed
where we
with
stand
TuneIn?
today.
Follow at
The
TuneIn
public
on
still
Facebook,
doesn't know who
Twitter, and
provided the
Instagram
emails to
to learn about
WikiLeaks.
some of the best stuff
Meanwhile,
happening
Assange is
around
still
the app.
running
You might
WikiLeaks
just
and still
discover your
releasing
next
documents.
audio
In March
obsession.
2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
On his podcast,
CIA,
Chris
the
Sims
agency
Unbuttoned,
charged
the
with
NFL veteran
finding
takes
and
an
keeping our
unfiltered
top
look at the
secrets
game,
can't keep
featuring
its own
player
secrets.
access, unabashed
As long as
opinion,
Assange has a
X&O
connection
film
to the
breakdown,
world,
and
no
stories
government
from
secret
outlets.
will be too far from exposure.
Julian Assange
As
is still
coronavirus
in the
cases
embassy, maybe
continue to
leave,
surge
maybe
across
he
the
won't,
Midwest,
kind of
retailers and
regardless, his
landlords
work has
alike
been done.
are facing the possibility of
changed the way
more
people
store
think about their
closures and
governments,
bankruptcies.
about their own
For more on what they're
secrets, about their
seeing
own
on the ground, the
hackability,
chairman and
and
CEO
really
of
the
Charter
world has
Holdings,
changed.
Ray Washburn, is back with us, along with Ledberry's co-founder and CEO, Paul Tribble. Guys, thanks for the time today. Always good to check in with you.
Good morning.
Thanks for having us.
Ray, we've been talking about a sort of fiscal cliffs for the business for several months now. We're entering a period where temperatures are going to change for big swaths of the country. I guess, where are you seeing the mix right now in terms of what you've been able to do in open air and, you know, and as even some of these restrictions are starting to loosen?
Sure. Well, in Texas, we're back up to 75%, which is fine. We have beautiful weather in Texas. But when you look at a city like New York, where the mayor has just said, hey, we're going to let you stay indefinitely outside, but if you enclose, we're only going to let you have 25% seating. The average New York outdoor restaurant has about 20 to 40 seats outside, and that's only 5 to 10 seats outside. In Texas, they're going to allow us to go to 75%, but as I've said, we run 100% kitchen, so it's very difficult when the cooler weather comes in. We've gotten our sales, fortunately, back up to 80% plus, which gets us, you know, back above the break-even line. But when the colder weather comes in, if we're not able to go back to 100%, even in our outdoor enclosures, that's going to be the, you know, the next foot that drops.
Yeah. Paul, do you think consumers are going to, you know, give temperatures a long leash and basically say whether or not they want to support the business just because they want it to exist for the future? I mean, are they going to go out in conditions that maybe they wouldn't have in pre-COVID eras?
I think there's that to a degree. I think customers are always going to want to support businesses that they believe in. But I think there's huge challenges and headwinds, particularly heading into the fall and the spring for particularly, apparel retailers. You had PPP, you had rent deferrals. That only gets you so far. That's sort of a short-term solution for a long-term problem of just customers aren't going to be able to come back into stores like they have, or their, buying has changed, where they're not buying work clothes, or they're not buying things for special events. Some businesses, I think like ours, have been able to pivot. We started making masks back in March, sold over 500,000 masks, not only to individuals, but, companies like Capital One and Altria and others. And that's helped us bridge the gap, which is great and will get us to the other side. But not every big business is able to make that pivot. And I think particularly if you're looking at, your mix of sales, over 50% from stores, 50% from wholesale, it's going to be a hard time for these companies through the fall and the spring. And that's just because you've had 2 seasons of really customers not coming back into stores. That's incredibly challenging for anyone to survive. Then you have the inventory decisions that have been made, almost 9 months in advance, sometimes pre-pandemic for the fall. And so people are going to be either looking at not too little inventory to sell to folks or too much, and that balloon just might pop. So, my gut is some of our businesses, small and nimble ones, are going to survive, but the past is the best predictor of the future. I think in 2008, 2009, there were over 400 retail bankruptcies each year. I think this year there's only been 45, and I think that pain is going to sadly come in the fall and then sort of carry on to the spring for some folks.
Yeah, just to get to those numbers a little bit, Paul, there has been a sense of suspended animation, people trying to, stay afloat and utilize whatever support, payments are out there. Do you think that there's not actually a way for these folks to navigate their way out of it? Because so many chains have already been in shrink mode. The markets seem to be willing to float a lot of them, at least part of the way.
We have today allowed people for the first
time. I think all the pain has been delayed at this point. And it was done so, specifically because we thought this was going to be much shorter than it was. So I think once PP is dried out, and then particularly on the retail side for landlords, landlords can only give so much grace, and Ray can certainly speak to this, but you can't, do 6 months, 9 months of free rent and take on that liability. So I think there's companies with a lot of stores that are looking at the fall and saying, hey, people aren't going to come back, that's going to be a challenge. And so either you're saying, what can I do to change and to add cash into the business, things like face masks that we've done. But again, those are not long-term solutions. It's really going to take customers getting back into stores, and it's going to take, probably some further assistance to get there to bridge a lot of these major companies with large retail footprints, over the next 12 months.
Ray, if there's one part of the economy that's had a V-shaped recovery, it's retail, returning to pre-pandemic levels over the summer. But in order for that to be sustainable, how critical is it for the stimulus bill to be passed?
5G will also
well, it is. And one thing that you probably haven't heard is on the PPP money, the original money that we were given last spring, that money we all had to submit by October 1st. The SBA has 90 days to determine if you spent the money correctly. And they need to do things right for the American taxpayer. The problem is we want to invest in our future, in CapEx and things like that. And a lot of that, throughout our entire platform of restaurants, we can't really spend the money. We feel somewhat paralyzed until the PPP gets forgiven. And everyone in the industry is feeling that. And so we do need more stimulus in some parts of the economy, but we need to have the old stuff forgiven so we can go forward and take our capital and invest going forward. But I'm going to switch real quick on the retail side as well. We have a lot of retailers, and the ones that have done really well are the ones that are selling accessories, purses, shoes, things like that. The ones that are hurting are the men's suit and haberdasher and things like that. So it is a true economy of the have and have-nots. And women's apparel, though, has recovered remarkably quickly. It's the men's side that has stalled out.
Have as many as 110 appointments.
Hey, Paul, we mentioned the surge in cases in the Midwest at the top of the segment. The bullish argument is that it's not going to result in greater hospitalizations, and even if it does, lockdowns are not coming back the way they did in the spring. But others say that this portends sort of a dark chapter as we go into the fall. Where do you think consensus is right now on that in the business?
I think for us, it all depends on what the consumers want to do. And, at least where we are, we're based in Richmond, Virginia. Consumers want to eat outside. And consumers want to go for stores for maybe the things that they need, like, home goods if they're buying a house or going to Lowe's. But, for people that are doing consumer goods, like we are, I don't think there's going to be a big rush back to the stores. And whether that's lockdowns or not, people are just, antsier about being inside. And so, I think the question is how can you meet those consumers where they are? Luckily for us, we're a 90% e-commerce business. and we sell not only shirts and suits, but the majority of what we sell is like casual clothing, which is like flannels and sweaters, which we hope people are still going to buy. To Ray's point, people still want to shop, but they're just doing it dramatically different. So those retailers are going to be far more lockdowns, even if there are less people in store, as long as they have a robust e-commerce business, a plan to get through the spring, and hopefully get to summer of next year when we're back to normal and people rush back. And look, I'm an optimist. I'm a small business owner. People will come back, and it's going to be a matter of who's going to be there and who's going to be in a great spot. And I talked to a factory owner the other day. He said, look, if we can make it, to summer of next year, there's a potential that we'll be kings as that factory, because we might be one of the only people around. And I think that's the case. Just, be smart, hustle, keep your head down, create cash when you can, and get out of it next spring.
Yeah, Carl, I tell you, one of the things that we've seen that is a positive, actually, is uptrending in our commodity prices. Last summer were going up in the food business. Other than beef, which is still a little uncertain, but all the other commodity prices had pretty much flattened out or come down a little bit. And that is because the factories are working again. The $600 a week unemployment, which ended July 31st, that it's now gone through the system to where people are back working, and pricing has flattened out. So that's one sign of optimism for us, because last summer it was going haywire across all commodity prices.
His father was a factory foreman and his mother a homemaker. It is widely said that
it's a great reminder of just that
persona can be traced back to him getting into fights when he was younger, which
I think our challenge outside, which is different from the restaurant industry, is we're buying things 6, 9, 10 months in advance, and so really it's helping retailers like us shorten the chain cycle, because prices might pop up and that might not affect us, but a factory that was closed in Italy, where we make a lot of our products, for 3 months during last spring, is affecting deliveries now. So it's really the long timetable, which I feel like is really makes maybe what's different than food and beverage, as it is for like apparel retail, is I think like we're feeling those challenges, in the fall and in the spring of next year. And so it's just a matter of, powering through and getting to the other side of it.
And those people soon brought Putin over.
Paul, Ray, thank you guys. That's a great touch on two really important sectors. We'll talk to you later.
And let's get to Rahel Solomon now for a sector story. Rahel, good morning.
Hi, Seema. Good morning. Good morning, everybody. So yes, as mentioned, stocks are starting the week on a high note, building on Friday's gains. All S&P sectors, as you can see, are in positive territory, and among the best performing sectors this morning is energy. That sector is down 14% over the last month, but today it's up almost 2.5%. And leading the sector higher, National Oil Well Barco, that's up more than 5%, 4.5% now, as well as Schlumberger, which is up 5.3%. Schlumberger, 4.5%. Energy, by the way, Devon Energy higher by 8% on that announcement that it will move forward with the merger of equals with WPX Energy. Carl, I'll send it back to you.
3 months later, thank you. Dow's up 430. Squawk Alley starts in a moment.
Hey, this is National Radio Hall of Famer Mike Greenberg here to spread the word about my new show, Greeny, on ESPN Radio. Join me every weekday at noon for my takes on the biggest sports stories and sports debates.
Did you feel a lot of pressure, like your legacy was going to be judged as you are taking this big leap to do a new show?
I felt a lot of pressure. I wouldn't say it was because of my legacy. I don't think sports announcers have legacies. I mean, maybe a very, very...
Search ESPN Radio on TuneIn to listen live weekdays from noon to 2 Eastern, or search Greeny to catch up on the latest episode.
Your weekly golf recap is here. On the Golf Weekly podcast, Joe Malloy talks with pros and insiders to review everything that's happened and is going to happen in the glorious world of golf.
Hello there, everyone. It is busy in the world of golf right now. Not least in Golf Weekly, we have a very special guest coming up. He is an Open Championship legend. The RNA are putting together a pretty cool idea at the weekend. More details on that to come, but suffice to say, we have as good an open player.
Search Golf Weekly on TuneIn to listen.
Years of data. That's incredibly valuable.
I don't know.
Or prison. When do we introduce Sriracha?
Not soon enough.
Exactly. These are our sales, by product, by region, set against evolving demographics. You can actually see taste trends.
Since when can we do that?
Since we started working with BDO.
People who know BDO.
In the expansionist Russian state, Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in orbit. But people to the line take good care of Russia. That's how he understands it.
Annexation and invasion, as well as oil, gas, and trade, former Soviet Union. Dmitry Medvedev stepped in as president.
We did it!
Wherever you start, SNHU is where you can finish.
It was actually a period of cooperation between Russia and the US that benefited both countries during Biden's presidency.
Look at that! Master's degree! I did it! I did this for my children. I am very proud of myself.
Third term?
Finish your degree at snhu.edu.
2012 election.
On Squawk Box, Morgan Stanley's chief U.S. equity strategist on the reality of the markets. Straight talk on what to expect in the fourth quarter. Squawk Box, 6 a.m. Eastern. And watch Squawk Box anytime on demand.
Good morning. It is 8 a.m. at Uber headquarters in San Francisco, California. It's 11 a.m. on Wall Street, and Squawk Alley is live.
Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low. And America
Good Monday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with John Fort and Deirdre Bosa. As we watch the markets have a nice bounce on this Monday morning. Dow up almost 500 points. S&P holding on to 33.45, awfully close to the 50-day. As banks and energy are part of the story, John, but also tech. As you got names like Uber, obviously the London Calling reference today, and Amazon up almost $50.
Yeah, that's right. Amazon in the news this morning because they've set a date for Prime Day. That is going to be October 13th and 14th, delayed because of the pandemic. I'll tell you guys, that's setting up a really unique 1, 2, 3 in e-commerce and retail. Now October, it actually has a lot of action. You got Prime Day in October. You've probably got an iPhone launch happening in October. Normally that's in September. Then you've got Singles Day from Alibaba on November 11th. Then you've got Black Friday in the mix there. You've got these console launches happening, Deirdre. So it's an interesting moment for investors to sort of think about what that means, all that retail momentum going into Q4 and how that might play out differently this year.
That's right, John. There's so many sort of shopping events for the rest of the year. And, you know, it's interesting when we look at Amazon and Baba, some of the biggest players, but also, you know, something I've looked at in recent years is that D2C direct-to-consumer ecosystem. How are they gearing up? And in that case, you might want to look at stocks like BigCommerce and Shopify. Also, a few private companies getting some funding, announcing funding this morning, like Allbirds, of course, that D2C darling. There's also ShipBop, which handles the warehouse aspect for some of those smaller brands. So it's all leading up, John, and we'll see if the pent-up demand is there, especially if we don't get any more stimulus coming consumers' way. It will be an interesting holiday season. Of course, Amazon pushing that Prime Day back several months. Is that going to sustain the rest of the holiday season? Because we know Prime Day isn't just about Amazon anymore. A lot of other retailers jump on that bandwagon.
Yeah, Shopify, which you mentioned, specifically likes to try to do that, get the merchants on the platform to sort of swim in that shopping ecosystem that Shopify creates. It's one of those stocks I started paying attention to about 3 years ago. Producers on the show were making fun of me. 12 months ago, it was at 300. This morning, 972, right there. So, Carl,
yeah, John, the Canadian company that could right now, one of, if not Canada's biggest company, certainly north of the border, keeping an eye on it. But I still remember when that company was valued, I think around $10 billion in market cap. What a run it's been. Also, BigCommerce down today, but that IPO'd what at $24 now. Trading at nearly $80, even though we've seen it sell off in recent weeks, Carl. Dollars now trading at nearly $80, even though we've seen it sell off in recent weeks, Carl.
Yeah, and by the way, John, the producers make fun of all of us all the time. That it doesn't sound like, at least you think, the tech pullback has really had any distressing effect on private markets.
Yeah, you're right. You know, it's obviously today's a good day in the market, but the last several weeks have been challenging, especially for big cap tech. we have not seen it impact our business on the Stifel investment banking side, either for M&A activity or private capital raising or the IPO pipeline. A lot of it is because both executives, the investors in these companies have basically thought that this run-up, especially in the July-August timeframe, wasn't necessarily sustainable. And so these transactions and the participants in them we're essentially discounting a lot of the run-up that we've seen in the last couple of months. So the pullback itself was essentially anticipated. And so that means that activity remains strong. Deal activity is strong. It's a really strong pipeline. And just like John was mentioning, the product launch that are anticipated in the other events, between now and year end, you're going to see a lot of deal activity. So, this pullback hasn't really affected things on the banking side.
Yeah, all that said, I mean, with everything you just said, I wonder if we're going to look back at, say, Snowflake's debut, right, where we got it to 319 on that intraday trade, we all remember it. Are we going to look back on that in 6 months and think that was historically relevant?
It depends on your time horizon. I think, look, these companies, the tech companies that we're working with and we're seeing come to market are very high quality. And so we can all debate what the right multiple is. We can all debate around, what the impact of lower for longer in terms of interest rates are having on multiples, and that kind of stuff is hard to predict. But what I can tell you is the companies that are going public right now, and you mentioned, one, they're very high quality businesses that are doing well, COVID or not. Certainly COVID's having some impact, but what I would tell you is a lot of the expectations over the next year seem very reasonable to me. So I think fundamentals win out ultimately, and
During a company trip to the US in 1995, Ma had his first encounter.
Hey, Mark, it's John. So you mentioned M&A. Microsoft bought ZeniMax just a few days ago for $7.5 billion. That almost kind of like zips over. That's one of their largest acquisitions ever. That's like GitHub, Skype level pricing. So you got that going on. And you've got this especially packed Q4 with October being a big retail e-commerce month. Which deserves more attention, the M&A piece or the turn to the consumer to spend piece?
Then Ma joined a government agency in
M&A in tech has actually been very robust this year. The way we track it within internet and digital media, we're seeing a little over $57 billion in deal volume year to date. So we're approaching $60 billion. That's up almost 2x versus this time a year ago. And there have been some very big transactions. Interestingly enough, your example of Microsoft buying ZeniMax, the two biggest sectors that we're seeing activity, not surprisingly, are the two sectors that are benefiting the most in the current environment: e-commerce and gaming. So, I think that, and like I said, the activity pipeline is very robust, either in M&A or in the IPO, both around e-commerce and online gaming. Clearly, as we move into the back half of the year and the holiday season, the consumer is going to come into focus. E-commerce, I think we're going to just have a blockbuster e-commerce period during the holiday season. And we're seeing that with companies like Amazon really ramping up record levels of hiring. And you talked about Spotify and others. Spotify, getting their fulfillment and logistics business, which is a new effort for them in place heading into the holiday season. And you've seen the recent upgrades to UPS and FedEx and all the benefit there. I think we're going to just see an amazing e-commerce season. So I think you're right. The focus will move from M&A into the consumer e-commerce as we head into
just 1 year after it forced eBay out of China. Alibaba
Hey, Mark,
debuted its
a
business-facing
blockbuster
division on the Hong Kong
e-commerce
Stock
season,
Exchange.
is that a given,
But it
particularly
delisted
sort of
5
what
years
we've seen
later
over the
as its
last
performance sank.
few weeks, especially we're seeing coronavirus infections
In
rise.
2014,
The
Alibaba raised
idea of
$25
more
billion
fiscal
for the
stimulus
biggest
at this
IPO
point
in New
still
York.
seems very uncertain. So what makes you believe that it's going to be
After
blockbuster,
achieving
that
dominance
consumers
in the business
are going to
of
be want to
e-commerce in
spend
China,
going
Alibaba
into
has
the
been
holidays?
building an internet empire
I think,
worth
the stimulus
$472
package
billion
could have some impact, but it's probably more of a 2021
online
impact.
video streaming, movie
Right now,
production,
all the data
healthcare,
that we're seeing
sports,
suggests
retail,
continued
steady high rates of e-commerce growth. And in fact, if the hospitalizations and the infection, unfortunately, some of the improvements start to plateau, and as we head into the more heavy flu season, if we actually see, a slight impact there, unfortunately, it could benefit some of these stay-at-home, companies, which would benefit e-commerce over brick and mortar. So I actually think that some of the dynamics that you point out, it's unfortunate for folks that get sick and whatnot, but it could benefit, I think, e-commerce in the short run. Clearly, the economy, stimulus, and other things are something to be concerned about over the medium and long term, but I think that those are more impacts on next year.
Speaker and really able to convince others to
That's a good way to start the hour for us, Mark. Always appreciate it. See you soon.
Alibaba to be
See you
the
soon.
world's fifth largest economy faces strong competition at home and
After the break,
abroad.
Recode's Kara Swisher on the latest twist in the ongoing TikTok saga, her sit-down with Elon Musk, and a whole lot more. Big show still ahead. Don't go away.
Hey guys, it's Mina Kimes, an NFL analyst on ESPN's NFL Live. Your daily deep dive into everything happening around the league.
Drew Brees is thrown for more touchdown passes than any quarterback in professional football history.
Don't forget you can hear me and your favorite ESPN analysts discuss the NFL's hottest topics whenever and wherever you go with TuneIn. Watch live weekdays on ESPN TV or anytime as an on-demand podcast. Just search NFL Live on TuneIn to start listening.
Halftime Report. Weekdays noon Eastern on CNBC.
He's back on CNBC. A voice you trust. His reporting, his standards. Shep is back.
Our mission is focused. Seek the truth, find the truth, and tell the truth. And I can't wait to bring our newscast to you.
The facts, the truth, the news with Shepard Smith. Premieres Wednesday, 7 Eastern, CNBC.
Look, if you're spending countless hours in spreadsheets trying to organize your finances, you're missing out. Stop wasting time
and let Truebill do the work for you. It's the easiest way to save time and money.
Download today and take control of your finances.
Facing depression or anxiety? At Lemonade Health, you can have a video visit with me or another doctor in minutes.
If they write a prescription, I process those FDA-approved medications and send them to your home.
Once you get them, we'll call to check in. Visit lemonadehealth.com today.
Have you wanted to speak a new language, but thought it would be too difficult? Then try Babbel. Babbel starts by teaching you words and phrases that gradually get more complex. Soon, you're practicing short conversations. So in 15 minutes a day, you'll be speaking a new language in a few weeks. Babbel works because it's built around real life. It teaches you everyday practical conversations that you will actually use. Babbel, language for life. Try it free at Babbel.com.
Here, you've got shares of Tesla moving higher again with the stock now up 400%. That's 5x year to date. CEO Elon Musk sat down with friend of the show, Kara Swisher, on her new podcast, Sway, How Sway, discussing the EV market, upcoming election, and the company's ever-rising stock price.
I think some critical mass of the market has concluded that Tesla will win, I guess.
He got his bachelor's and Juris Doctorate from Stanford.
Gone on record already as saying I think the stock prices have been high. That was well before its current level. So, but if you also say, if you ask me, like, do I think Tesla will be worth more than this in 5 years? I think the answer is yes.
Okay, joining us now, Recode co-founder, CNBC contributor, Kara Swisher. Hey, Kara.
Hey, how you doing?
So yeah, at 140, he said it was high. It's 3 times that now, but he says you're still good. if you got at least a 5-year horizon. That's kind of interesting coming from Elon, right?
Billionaire.
Well, it is. He said a lot of things that he hadn't said. Of course, he's always sort of saying unusual things about the stock. But in this case, I think we were talking before that about sort of the long term. And I think what we were talking about is the idea that COVID had accelerated kind of trends and selections of companies that are going to be important in 10 years today. And I think that's really what he was talking about, is that he feels they're out of danger. He talked about them being, remember, he thought they were in mortal danger for a long time, that they've started to reach the kind of scale that's necessary to sustain things. And I think that's what he was discussing, is that if you're in this for a long term, we are the company to beat. And that's probably pretty accurate at this point, despite the fact that other car companies are in the game. They're far and ahead, way ahead of people now. They're trying to get even more ahead on batteries.
2 years ago, Elon was having the worst year of his life, and he was kind of alternating between crying and laughing with the New York Times. Now, 2 years later, the world is going through a rough patch, but Tesla and Elon Musk seem to be doing A-okay. What's your sense of him now? He's still very outspoken, but he seems to have kind of toned down some of the more volatile things that he was doing on Twitter anyway. What should we read into that?
Well, not everything. He and I got a few little scrapes. But yeah, I think it was interesting for him to, when he complimented oil and gas, I was like, who am I speaking to? Can I get another one of your family members on the phone? Because he has been sort of attacked, big oil, and as you know, talked about how they were sort of out to get him, and the shorts were in cahoots with oil and gas. And in this case, he was taking a longer view that a lot of these people didn't know that their industry would be so damaging to the planet. So he was sort of reaching, he was being empathetic in a way, although I'm not sure you need to be empathetic to the oil and gas industry, given the damage that industry has done and well known for a long time. So, you know, and we all like our gas cars, and we've used them and everything else, but I think he sort of is like, the game is over, and he thought that fossil fuels, the era was at an end, so why not say, well, they didn't know they were going to do this much damage. But that said, he talks a lot about the climate damage that has been done because of emissions and things like that.
And Kara, it's your turn. Now, over the years, you've talked to the most important leaders in tech, and I just wonder where Elon sort of stacks up in your latest conversation. I mean, the stock is up 400% year to date, nearly 800% over the last 12 months. Can he fulfill those expectations?
Well, I think, you know, I think he's trying with his battery issue, and I think he was irritated at the beginning of the conversation, and I didn't cover the thing, but he was mad. I guess I represented the press, but that people, he didn't need a prototype to show off that they don't understand me, essentially. And, you know, the issue is he's been more right than wrong in a lot of these things, and people have sort of bet against him. He had a lot of shorts against him. And so he's sort of in this, I'm going for batteries now. And what was interesting about him is I don't really know if he's a tech person anymore, or ever was after he stopped with X.com and PayPal. Because he's working in energy, he's working in transportation, solar, and now, of course, Neuralink, which we talked about quite a bit, this new company, the newest company, not a new company, about putting chips in your brains. He's sort of this sort of renaissance man of a lot of things, some of which will work out and some of which won't. But all of them are really interesting concepts, including tunnel boring. It's really interesting. And so that he doesn't really compare to, you know, Jeff Bezos at the end of the day is selling toilet paper, right? So, like, I don't know what to say. I know that, but you know what I mean? Like,
he's got his own space thing
storing information about toilet paper. I don't mean to be rude, but it's not like the Blue Origin stuff is interesting. He wants to go with a space module, and Elon wants to go on to planets. That's their difference in opinion, apparently. But you know, and even Steve Jobs, he's selling a phone, right? Or I'm not mean to impugn them, but these are big ideas about climate change, about how we live on this planet, the air we breathe, and everything like that. And so it's kind of hard to. I don't know who he'd be compared to Thomas Edison, I guess, because Thomas Edison was sort of involved in a lot of different things. You know, we don't know our history as well, but Thomas Edison was involved in all kinds of stuff, including, I think, electric. I'm not sure if he. I think he was. I think he was involved with electric cars. But the conceptual ideas around them, whether they work or not, are fascinating. And the Tesla stuff seems to be working out better. And as you know, 2 years ago, he really was exhausted. That's the last time we did an interview, right coming out of that period. A taped interview. interview. I've seen him since then. But and so he really has sort of just continued to keep going with it. Making a car company is
whether
hard.
Thiel takes a new
He reminds me of one of these Jeopardy players that changes the game. What he's actually doing is the stuff that VCs and entrepreneurs in the Valley talk about doing. The changing the world, the flying cars, the kind of. Meanwhile, they're making a photos app, but he's actually doing all these other things at the same time. But Kara, I want to also talk to you about TikTok. A U.S. judge over the weekend blocked President Trump's proposed ban on TikTok. This strikes me as interesting because you have these duels, it seems, between executive-type branches and judges, with arguably the legislative function being left out because it won't act. And I would parallel this to what's happening with Uber in London.
Yeah. Well, in this case, as usual with the Trump administration, they just made an executive order that isn't good. Like, we need to have real policy made on everything. And that's the problem here, is we're not doing it in a policy legislative way, which is the way laws that stick pass, but instead of by fiat. And in some cases, by fiat works. I'm not a complete detractor of that. But in this case, he opened himself up. Instead of making real China policy around issues of surveillance or issues of whatever the issues we have with China, and of which there are many, we're not making substantive policy. So he picked on something that would get in the news. He did an executive order that is very easily subject to legal challenge, and that's where we are. And therefore, we don't have a China policy. This is mired in the courts. It hurts the app itself. It doesn't come to a solution. It drags in companies like Oracle and Walmart. It's a mess, is what it is. And
so where does it go? Because judges aren't supposed to legislate, right? The Senate and the executive branch are supposed to be the mature voices in the room that push policy forward more, but that hasn't been happening so much. So does that hang in the balance in this election, whether there's a mandate in that direction, or people get elected or reelected who are willing to focus?
I think it'd be nice to go back to making policy and actually legislating. That would be great. But we have a president who likes to do, because he's frustrated with even though he controls one of the bodies of legislation, who's frustrated with this, and therefore puts out executive orders. And they're just the way they do these, just like they did with Section 230 or this. These are serious topics. We need reform of Section 230. We need to figure out our policy towards China when it relates to technology and other areas. But it doesn't come by just making doing Twitter and making these executive orders that are subject to. It's the same thing with Google coming up with this Justice Department. I hope they have a good case. If they're going to do this, they need to have a good, solid case that can be defended in court. And I think the court is a third branch that should be at least saying, okay, you want to go this way, you got to do a better job. And I think that's all. I don't think the courts are legislating. I think they're saying, this judge is saying this is not solid enough in terms. And so if you want to make a case, make a case.
I wasn't saying that they were or that they weren't. I'm just saying they're not supposed to. So we're not going to necessarily get this sort of new rules from the courts.
No, we're not.
Right? That has to come from legislative branches, right?
Well, like Scott Gallo and I talked about on Pivot, the Chinese are just waiting Donald Trump out. They think he's going to lose, and they're waiting for this to end. And then maybe we'll get some China policy. And if he does win, then he'll have to be thinking about China policy rather than doing it this way, because then nothing gets done. Nothing's going to get done here, especially around this. And it only hurts the growth of a really interesting company like TikTok and the thousands of people who work for TikTok in this country. And so I don't imagine they want this to continue, because it takes away the focus on making a better app and then making a safe app for Americans. And that should be the goal, making a safe app for Americans. It seems to have gotten completely lost here. Sorry,
if we really are doing everything by fiat now, then, I mean, it's one thing for Google to defend itself in court, but why would Oracle and Microsoft and Walmart, very sophisticated companies, choose to be part of a process that, as you argue, winds up in this morass?
Why not? If you can get a hold of this thing, this is a really incredible property. Like, it's not because it cost them some legal fees. I don't know. Why not? Like, if there's an opportunity to get a piece of a really interesting company on the cheap, why wouldn't Microsoft try to do that? If there's an opportunity to get an amazing cloud and security business for Oracle, why wouldn't they do it? If Amazon's, breathing down the neck of Walmart, why wouldn't they attach themselves to one of the more popular social media entertainment apps that 100 million Americans love. I mean, I don't know. Why not? Why not? It's a pain, but it's also possibly rewarding. And you're right under the hoop, right? I don't play basketball, but I believe there's an expression, right under the hoop. You just wait for the ball, right? Yeah. That's what my son tells me.
You're a few inches short, so I get it.
Yeah. You know, my son is
sharp elbows, though. I think you'd be a defensive force out there. Kara Swisher.
I have tall children.
Great to see
you.
They
will play for me.
Yes.
Okay, thanks a lot.
All right, Carl.
Make it almost impossible and even more expensive.
Still to come this morning, guys. Shares of Uber getting a nice boost after this ruling out of London, winning back their license in that city. We'll discuss what that may mean for the company in the near and the long term. Stay with us.
Other steps to make it.
Bluebird Cafe is about songwriters. The money that we take at the door goes to them. So there has to be a lot of effort towards generating revenue. Working with City National Bank and Diane is incredible because they understand the entertainment business. And to have a relationship with a bank that understands not just your business, but the spirit of your business is irreplaceable.
You know what hurts? What really hurts?
The doctor's not available until next month.
What?
What really, really hurts? What really, really, really hurts? But you know what's painless? Using ZocDoc to find an in-network doctor and compare reviews. And what actually feels kind of good?
Wow, that's better.
A same-day appointment.
Thanks.
What just...
To instantly book an in-person or video visit, download ZocDoc.
Did you know half of all guys over 40 will experience erectile dysfunction? That's right, half of you. But only 25% get treated, which means the rest of you may want to pay attention. With Roman, you can get ED meds prescribed online, delivered right to your door. Just visit GetRoman.com, chat with a U.S. licensed physician, and if treatment is right for you, you'll get genuine medication delivered in discreet packaging. Roman, let's take care of it. Get started with your free online visit at GetRoman.com/TV.
3 meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badge.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies. Or call 1-800-523-6900. Coventry Direct, redefining insurance.
Big names, heavy hitters, the smartest strategies for Alpha. September 30th, be part of the action at this CNBC virtual event. Register at deliveringalpha.com.
CNBC's Workforce Executive Council is an exclusive network of top senior human resources executives armed with the tools and resources they need now. To apply, go to cnbccouncils.com/WEC.
Uber shares are up after they have won their legal fight to continue operating in London. Deirdre, man, talk about circling back to a story from long ago.
Absolutely. I mean, clearly this is a win for Uber, but it would have meant so much more a year ago or more, especially because ride-sharing, as we know, has been so beaten down during the pandemic. But I want to pull up Uber's 5 top cities as outlined in its S1 when it went public last year. Here you have, okay, so London, some regulatory relief, but Los Angeles, San Francisco, right? Uber is battling AB5, that law that is meant to make their drivers full employees. And by the way, guys, Prop 22, that ballot measure is now the most expensive ballot measure in California history. So the stakes are huge here at Uber, and Lyft and others have spent so much money. Sao Paulo as well in Brazil. We know that this is a fierce battleground with Chinese ride-sharing giant Didi. So yes, Uber stock is up about 5%, but this is far from over. I mean, in the grand scheme of things, Uber, yes, has won approval in London for the next 18 months, but so much can change between now and then. John, I'm also not sure if you caught it, but in the information this morning, there was an article talking about infighting, no accountability in Uber's self-driving car unit. Remember, self-driving car, autonomous vehicles, these were existential for Travis Kalanick, right, the former Uber CEO. He said that this is what's ultimately going to make Uber profitable, and we just don't hear as much about it under Dara Khosrowshahi. There are some rumors that investment has either been scaled back or just isn't producing the technological results that many had hoped. So I think Uber, John, is still a very big question mark, and we know that it's trading far below that IPO price still.
Yeah, I mean, it's hard to think about 2025 or whenever self-driving is going to be ready, because we're stuck in 2020 right now, and what a year it's been. But it strikes me that Uber has a real shot here at building some momentum. It's got this London ruling, that vote coming in California. We will see. But time now for a news update. Sue Herrera has that. Sue.
I do indeed, John. Thanks so much. Here's what's happening at this hour, everyone. We begin with the TSA, which is reporting a 3-week high in the number of travelers going through its checkpoints, with more than 800,000 travelers, I should say, on 3 out of the last 4 days. Former Trump campaign manager Brad Parscale remains hospitalized after threatening to harm himself. His wife called the police saying he was armed and considering hurting himself. Officers convinced him to come with them without incident. In Spain, Madrid has added 8 more neighborhoods to his partial lockdown that now affects more than 1 million people. Outbreaks in Madrid account for at least a third of Spain's new infections. And here at home, research shows less than 10% of Americans have had the coronavirus. That study was done in July. It showed that even in the hardest hit Northeast areas, only about a quarter of patients tested had COVID-19 antibodies, far short of the 60 to 80% needed for herd immunity. You are up to date. That's the news update, John. I'll send it back to you.
Yeah, let's hope people stay healthy. Thank you, Sue.
Yes, indeed.
And as we head to break, take a look at the biggest gainers on the Dow this morning. Boeing is up more than 6%. Dow, American Express, Goldman Sachs, and Travelers right behind them. Stay with us.
So, what's your plan for retirement? See the world? See the grandkids? Keep doing what you love? However you plan to retire, you need to be prepared. Do you have a financial plan? Do you have a tax strategy? How much of your portfolio can you afford to withdraw? Learn more about these and 96 other retirement topics coming your way in this free guide from Fisher Investments.
Call now for Fisher's 99 retirement tips. Our free guide shows you helpful ways to make your retirement more enjoyable. It's sound advice for a more secure future. Call 1-800-881-4545.
You've worked years for a comfortable retirement. If your portfolio is over $500,000 and you want to make your retirement last, call now.
Get your free copy of 99 retirement tips today. Call 1-800-881-4545.
Don't just retire. Retire well.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to ownerly.com, enter the address, and see the home value instantly. Come to ownerly.com and see what your home is worth for free.
Hey, I'm Zach, CEO of Roman. Some health issues are tough to talk about. With Roman, you can go online, chat with a physician, and if treatment is right for you, we'll ship genuine medication right to your door. Let's take care of it.
Argon gas creates a very
I had my dream career and loads of student debt. So I went to credible.com and in 3 minutes had actual rates from multiple lenders and I saved thousands of dollars.
Visit credible.com to see how much you could save on your student loans.
We bring it
This is a keepsake frame. This is actually a photo from my wedding. I'm Adam Weiss, founder and CEO of Keepsake. If you're anything like me, you've probably got 7,000 photos on your phone. And sometimes the moments that really matter most end up getting lost. That's why I made Keepsake, the mobile app that makes it easy to have your photos printed, framed, and shipped to your doorstep. So if you've got a special photo on your phone, install the free Keepsake app. We would love a chance to frame it for you.
We move on to our process of
Alibaba kicks off its annual Investor Day today, and no doubt Ant Group, the fintech powerhouse, will be in focus ahead of its anticipated IPO, which I'm told could happen by the end of October. Now, a few years ago, Alibaba turned its profit-sharing arrangement with Ant into an equity structure that gave it a 33% stake. Part of that was a way to capitalize on an eventual IPO. And what a relationship it is. In the Ant prospectus, the company says that they work together by sharing insights derived from their platforms. So that is the country's largest e-commerce company and the country's largest mobile payments network. Now, the Ant juggernaut itself has grown into so much more than just payments, just Alipay. There's wealth management, credit, and insurance. A business model that Bernstein calls unique and without a pure benchmark in China or elsewhere in the world, which it values somewhere between $250 and $270 billion. And guys, that is more than most of our traditional banks. For more on Alibaba and Ant, let's bring in Youssef Squali, Managing Director at Truist Securities. Youssef, nice to see you, and good morning. You know, even with the Ant edge, competition in e-commerce in China has been fierce. You've got Pinduoduo, JD.com, just nipping on the Baba heels. Why is that?
Well, I mean, for a couple of reasons. First, the market is just ginormous, right? I mean, the other thing is Baba, up until very recently, had over 80% market share of e-commerce with some incredible margins, 40% EBITDA margins. And so over time, that just brings in a lot of competition, as it should be. What's interesting to us, and as you know, Baba hosted their day one of a 3-day analyst day last night, and they're still talking about growing the MAUs. They're still talking about growing the monetization of their user base, especially in some of these less penetrated areas where even Pinduoduo is trying to compete, like tier 3, 4, 5 cities where consumption is going up, internet penetration is going up, etc. So it's just very, very attractive market where you have dominant player in Alibaba, and so you have a lot of smaller competitor trying to get a piece of the action.
Right. So, Youssef, though, my point, though, is that if it has the insights of China's leading payments app, why doesn't Alibaba have more of an edge? How does it keep that, you know, headway against some of the other e-commerce players? And also, tell our viewers a little bit about this dynamic between Alibaba and Ant, especially because the IPO is coming up and it is likely to be the largest IPO ever.
Well, I think that Alibaba does have an edge in that by leveraging Ant, they've been able to continue to very successfully drive more monthly average users to the platform, more mobile user to the platform. I mean, as of last count, they have about 800 million users. That's larger than anybody out there. And even at 800, they're still adding 20 to 30 million users a quarter. That's in large part driven by Ant. The other thing is, over time, just like what you saw with PayPal and eBay, they have to part ways, right? And what we're seeing with Ant's IPO is a reflection of that. Alibaba is not the majority shareholder, only own 33%, but there is still an opportunity for them to continue to work closely through some arm's length agreements. So, you know, Pinduoduo doesn't have that. I can't really think of any other large player that has that kind of a potential leverage.
Youssef, is Alibaba the most undervalued cloud era conglomerate, or is it maybe the only fairly valued one? It just strikes me that we used to be talking about it in the same league with Google, with Amazon, but it's, you know, cheaper market cap wise than both of those. It's nowhere near $1 trillion, whereas Amazon's at $1.5 trillion in market cap. What's going on there?
I would argue that Baba, generally, not even just the cloud business, is one of the cheapest mega caps out there. for a company that's still growing, I mean, last quarter they put up a 34% growth rate. The quarter before that, which was in the middle of the pandemic, they still grew 22%. You know, we'll see what they say tomorrow night if they provide any new guidance. But this is a business which I think is going to continue to grow somewhere in the 25% range for the next 5 years, right? At their range or at their size. That's incredible. Within that, you have cloud, which I think is a crown jewel there. Unfortunately, that business, because it's not U.S., because it's first and foremost focused on China and to a growing degree Southeast Asia, it doesn't have the type of visibility that Google Cloud gets, that Azure gets from Microsoft, or that certainly Amazon gets. So I think part of it is that. The other is, look, at some point we're going to have to start looking at some of the parts. We've already done the math. And really hard to achieve. For a business that's growing 50% a year in and year out, we think that's worth materially higher than what the market is assigned to it right
So tell me, what's your favorite metric to watch for Singles Day? What are we going to learn?
Key to a bite. It's GMV growth, ultimately. That's really what you need to look at. And we're looking, again, the growth somewhere in the 30% range. That's faster than overall e-commerce in China. That's certainly faster than just regular commerce. The margins, I wouldn't get too bent out of shape if I see margin deteriorate a little bit. That's on purpose. The company has been doubling down on investment, in part because of cloud, in parts of because of this new retail, offline, online strategy that they have. So don't worry too much about the bottom line. It's really all about GMV. Because I still believe it's one of the best materials.
Well, Yusuf, at the same time, that GMV number has been under fire in recent years. It doesn't account for things like returns, so it's not exactly a pure play. You got to look at the margins, right?
Well, look, absolutely. Ultimately, without margins, you can't build a business. But we're not talking about, I'm not saying forget about their losses. These guys have seen their margin growth 30 or bottom line growth 30% last quarter, where their top line grew 34%. All I'm saying is there may be slight incremental deterioration in margin short term as they invest, as they double down in these newer initiatives to allow them to continue to grow around 30 or more % over the next year or two. But over time, we absolutely believe that there is a ton of leverage in this business. And look, in comparison with Amazon, if we think about Amazon having, even over the very long term, margins in the mid-20s, and by the way, we love Amazon, we think Baba has the potential of having margins in the 40% plus over time. So just to put things in perspective. It's a stage where you're
right, and it's interesting as we talk about value as well. Of course, Alibaba listing in Hong Kong, yet still not really in the same league, at least in terms of market cap, as an Amazon. Yusuf, we'll talk more about that next time. Thanks so much for being with us today.
Thank you, guys. What I love about bicycles, you can start on a Monday.
Markets are holding in there today. Dow's up almost 500 points, 1.8%. S&P 3350, as we are looking at the best 2 days since June. Back in a minute.
When I was laid off, it was absolutely terrifying.
I felt like I was just fighting an uphill battle in my career. As a little kid, I knew that I wanted to work with computers.
So when I heard about the Applied Digital Skills courses, that definitely appealed to me. You're learning how to create spreadsheets, documents, forms, and surveys. I'm thinking I can become more marketable.
I got to about the third course, and I'm like, I probably could do this for a living.
Then we assemble it. You don't need to be a computer expert to be great at this. These are skills lots and lots of people can learn.
Some bikes you can assemble in 3 hours, some will take 3 days.
I feel hopeful about the future now.
It's empowering to have that knowledge that nobody can take away from you.
And they're going to own it for the rest of their lives. So we just want to make sure they get the right thing.
Amica, we believe in life's extraordinary experiences. We're an insurance company that delivers an experience that meets the only standards higher than ours. Yours. Experience Amica. Auto, home, and life insurance.
I just did the free version, which was really cool. You could message your top picks.
That's new.
People that were exactly the type I was looking for.
You don't want to have to pay for everything.
I had a lot of fun on it.
Ready to start something great? Try Match.
Electronic vehicle stocks, SPACs, and COVID beneficiary stocks all climbing in popularity among millennials. Kate Rooney has that for us. Kate?
Hey, John, younger traders have been rushing into some new stocks in recent months. According to a study out today from Apex Clearing, younger traders were overwhelmingly buying electric vehicle stocks, SPACs, and names that benefit from the pandemic in the third quarter. The cohort made, quote, aggressive moves into the electric vehicle space. One example, Tesla dethroned Apple as the top stock among millennials. Chinese EV stock NIO moved up 34 spots on the list of millennials' top 100 picks. And Workhorse also got a boost, up 28 spots. Millennials also got in on the buzz around SPACs, or special purpose acquisition companies. SHLL, which is Tortoise Acquisition, went from unranked to number 34. SPAQ, Spartan Energy Acquisition, made the list as well as it looks to bring electric car maker Fisker public. The outlier here in that space was Nikola, which still made the list, but it dropped significantly in the quarter, moving down 40 spots to number 89. Analysts tell me that was due to some downgrades as well as changes in executive leadership. Stocks that benefit from the ongoing pandemic continue to make a splash. Peloton is up 41 spots. DocuSign went from being unranked to being in the top 50, and Teladoc is also rising. Major vaccine manufacturers Johnson & Johnson, Pfizer, and Moderna are all on the Millennial 100 as they approach or begin those phase 3 trials. And guys, as sports kick off again, Penn Gaming jumped 34 spots in popularity. Across generations, though, it's still all about big tech. The report, which analyzed more than 1.3 million investment accounts, showed broad support for Apple, Amazon, Tesla, as well as Microsoft, which were all in the top 5 for every generation. Chip stocks, NVIDIA and AMD also joined the party, jumping multiple spots across Gen Z, Millennial, and Boomers' top holdings. Deirdre, back to you.
Semis and Gen Z, who would have known? Kate, thanks for that look. As we had to break, take a look at shares of Snap and Spotify. They are on the move after Guggenheim upgraded those two names, taking Snap to a buy and raising Spot from a sell to neutral. We'll be back in just 2 minutes, so stay with us.
How far does $1 million go in retirement? Like so much in life, it depends. Is your portfolio in stocks, bonds, cash, gold? Have you planned for greater healthcare costs as you age? Where do you live? Cost of living makes a difference, as do market conditions. Bull or bear? Lots to think about. Fisher Investments can help.
Call now for your free Fisher Guide, the 15-minute retirement plan, and find out how long your portfolio will last, how much income you can take each year, how cost of living may impact your retirement, and more. Call Fisher Investments for your free guide, 1-800-330-0011.
For over 40 years, Fisher has helped investors achieve a comfortable retirement. If your portfolio is over $500,000 and you want to make your retirement last, call now.
Call now for your free retirement guide. Call 1-800-330-0011.
Don't just retire. Retire well.
In today's climate, you need to evaluate all financial options. Consider a balanced transfer card. By utilizing a 0% APR, you'll pay down debt faster and keep your credit score intact. Explore your best options. CNBC Select, the stories you need for the smartest way to handle your credit.
No opinion, no pundits. Nobody telling you what to think. Just the facts. There is no more powerful instrument than the truth.
The facts, the truth. The news with Shepard Smith. Premieres Wednesday, 7 Eastern. CNBC.
Prescription eyewear can be really expensive. But here's the secret. Glasses don't actually cost that much to make. Surprise! Especially when you design your own eyewear and then sell it directly to your customers. Like we do. Oh, hi. We're Warby Parker. Our glasses start at $95, including prescription lenses. And the best part? You can try 5 pairs for free at warbyparker.com.
With it, but I think that's one of the things that
this is a keepsake frame. This is actually a photo from my wedding.
Lines are doing and what the color of the wood.
I'm Adam Weiss, founder and CEO of Keepsake. If you're anything like me, you've probably got 7,000 photos on your phone. And sometimes the moments that really matter most end up getting lost. That's why I made Keepsake, a mobile app that makes it easy to have your photos printed, framed, and shipped to your doorstep. So if you've got a special photo on your phone, install the free Keepsake app. We would love a chance to frame it for you.
Later this week, CNBC's Delivering Alpha back for its 10th year. Some of this year's speakers include the Treasury Secretary, Stephen Mnuchin, Chamath Palihapitiya, and many others. It's this Wednesday, September 30. Visit deliveringalpha.com to learn more and register. Squawk Alley's back in a moment.
We wanted to go for reports that were hollow as they could be, but still be strong enough to work well. Too light and they don't serve well, but too heavy and they don't serve well. So there's a balance point there. That's where we try to be. Taking the board off the rock table once the top is done. One of my top favorites, puppets. It's just new, everything else is added with you. It's simple, it's pleasurable, it's quiet.
At U.S. Money Reserve, we've helped hundreds of thousands choose the best precious metals for their retirement portfolios, and many are in profit positions today because of those choices. So don't wait until the next crisis. Get started securing your financial future today.
One of the criticisms of traditional IRA accounts is they're typically tied to paper assets that are often unprotected from inflation or even a market crash.
Recently, Congress passed a bill that created a better solution. It's a new type of IRA that allows you many of the same tax benefits of a traditional IRA, but without the same types of exposure to market volatility. It's like somebody finally came up with a better mousetrap, but for the IRA. So what's this better mousetrap called? It's called a self-directed IRA. And we're not talking about gold ETFs or some other type of paper gold or silver note. We're talking about real, solid, physical gold, just like the gold I'm holding in my hand. U.S. Money Reserve agents are knowledgeable in all aspects of self-directed IRAs, and they can help you from the beginning to the end.
The U.S. Money Reserve, I highly recommend it to anybody out there looking for an alternative to these dangerous times.
What they've done for me in my portfolio is I couldn't ask for anything better. I really couldn't.
I would recommend U.S. Money Reserve without any hesitation or reservation to anyone. I would not use anyone else, honestly.
Securing your savings with gold or silver in a self-directed IRA is an easy way to protect your financial future, so you don't want to wait for the next market crash. Call and ask the experts at U.S. Money Reserve to send you their free information package. It's full of everything that you need to know about getting started on your self-directed IRA today. You'll be glad you did.
On Squawk Box, Morgan Stanley's chief U.S. equity strategist on the reality of the markets. Straight talk on what to expect in the fourth quarter. Squawk Box, 6 a.m. Eastern. And watch Squawk Box anytime on demand.
When a customer gets the board, they feel it.
36 days until Election Day, though people are voting all the time, and Facebook is facing increased scrutiny of its content moderation and policy decisions. The social network's former director of monetization, Tim Kendall, told a congressional committee last week that the company took a page from Big Tobacco's playbook to create addictive social media loops. Today, he is CEO of Moment, an app that helps adults and children use their app in healthier ways. And Tim joins us now. Tim, great to see you. I want to start off getting your sense of what's happening with people's health and healthy use of technology in a pandemic where people are turning to devices for things we used to go directly to people for.
Right. Well, I think in a nutshell, people are losing control over how they use their phones. And the
focus a moment is to help you recontrol or get control back of how you use your phone. And I think that the pandemic and the quarantine is making that worse and more challenging for people.
So put yourself back into that director of monetization mindset. When you're already trying to get people into loops of usage and kind of gamify their behavior, but now they're even more turned toward your product to connect with family, with everyone. What happens? What's the impact from here of what all of these companies are going to be doing in these moments?
Well, I think the impact is that look, Facebook doesn't want to arbitrate truth, and I understand that, right? So they don't want to correct misinformation. They don't want to correct ads that have false statements in it. But the problem with that is that then you leave it to the algorithm. And the algorithm isn't thinking, is this true or not? The algorithm is actually thinking, how do I maximize user attention? So the problem is that the algorithm's intentions and the business model, which is to get as much of your and my attention as possible, is just fundamentally, it's misaligned with showing you what's true and what's correct in the world. And that's what I'm so alarmed by, is that misalignment between the business model, what the algorithm is doing, and then what the outcome is for the user.
Hey, Tim, I wonder what your reaction was to Nick Clegg's interview in the FT last week, where he basically talked about some of the break the glass scenarios the company has in restricting content entirely once the election results really start to roll in. I mean, did that seem novel to you for the company? And how assured are you that they would carry through on some of those measures if needed?
I mean, hard to know what they're going to ultimately do. It doesn't surprise me. When they want to, they can restrict specific types of content. Look, they do it with misinformation on COVID. They do it with hate speech that incites violence, right? They're able to somehow magically find this line where any content that directly incites violence, they can remove. But if it doesn't, they leave it. Unfortunately, the problem with leaving hateful content that doesn't directly or literally incite violence is it still makes people angry. And it still, we all know, ultimately leads to violence.
So, Tim, I just wonder if the algorithm is focused on maximizing engagement, profits are focused on maximizing engagement. What is the solution here? Is there a business case for more moderation? Does that come from regulation? Does that come from a changed business model?
I mean, I think ultimately in the near term, it has to be either the company taking the accountability, which they haven't done so far, and then some regulation. That's kind of near in medium term. I think long term, these companies...
But what's the business case for that? If they're making so much money, what's the business case for them to change?
The business case is that their consumer is getting sick, and society is changing and eroding. That's the business case, and you're right. There's not a for-profit business case. But I think if we use a frame of what some people call stakeholder capitalism, which is, okay, we need to do well, and our constituents need to do well. In Facebook's case, Facebook's doing great. As you point out, advertisers doing pretty well. Users getting more depressed, getting more anxious the longer they spend on Facebook. Their brains are changing the longer they spend on Facebook. And then if you just look around, you see the impact on society. So if they want to look out for all their stakeholders, right, in the course of building a for-profit business, they've got to be accountable to the health and well-being of their users. And I don't believe that's what's happening right now. I think they're completely disregarding the user and their health and well-being.
Well, Tim, I'm not sure that my sense is that Facebook management believes, as you seem to be asserting, that their product is fundamentally unhealthy, that they would have to change it. They think that on balance, what they've made is good. Does it require an entire mindset shift on their part, or?
That's my view. In the 1950s, you had physicians advertising cigarettes. You had people whose job it was to look after your health and well-being on TV saying, I smoke these cigarettes. I'm a physician.
All right. Well, I think that's going to be a tough sell to them. So maybe it's the longer-term legislative solution that we need to look for.
Yep.
All right, Tim, thank you.
Thank you.
Yeah, John, it's a tough analog using tobacco because, of course, we all know it took the Surgeon General and a report to start putting things on the sides of packages before things changed. A lot of stuff's heading our way, John, in the next few days. We talked about the debate tomorrow, ISMs, Jobs Friday, but we're going to get Micron tomorrow, and that's a bit of a focus today, too.
It is, and all of that, I think, rolls up into what we started off talking about, Deirdre, which is this unusual closing 3 months of the year where the consumer, where retail is concerned. A lot of the chip stuff is what's anticipated as far as demand.
Kyle and Klaus.
Absolutely, and a lot of questions going into the rest of the year about the economic recovery. The first part was relatively steady, but what happens as we head in, if we don't get any stimulus, as we head into the Christmas season, right, Carl? But as you can see, the major indexes, they are rebounding today from last week's volatile week.
No question. Best 2 days since June. The bank's best day since August. Nearly every Dow component is green. Sully's in for the judge. Let's get to the half.
John and Beers, thank you very much, and welcome to the Halftime Report, everybody. I am Brian Sullivan, in for the aforementioned Scott Wapner, and stocks, they are rallying as we head into the home stretch of a September to, well, forget. But the big money question for you, has this correction run its course, or will the selling start again as we hear more talk about contested elections and rising tensions with China? We have got the perfect crew to debate it today. Your investment committee, Joe Terranova, Pete Najarian, Tiffany McGee, CEO of Momentum Advisors, Institutional Investment Services Group, Bryn Talkington, Managing Partner at Requisite Capital Management, and Kate Moore, BlackRock's Head of Thematic Strategy and Global Allocation Investment Team. Before we kick it off and go around the, well, virtual table, here's how things look right now, and we are not virtually, we are really in the green. Dow future, or Dow up 100, or I should say 1.76%, 476 points right now. The NASDAQ not up as much as the Dow, but look at the small cap stocks. The Russell 2000 called sixth the hard way, up 222%. Even with Friday's move, we are still coming off 4 down weeks for stocks, but a pretty lousy month. But now the S&P 500 is on pace for its best 2-day gain since all the way back in June. Did you follow that, Kate Moore? We're literally in a 4-week down streak, but at the same time, in the same breath, I now say we're on our best 2-day stretch since all the way back in June. The volatility has really grown. What are you expecting ahead? By the way, I'm told there's an election in 36 days.
Is it just 36 days, Sully? It feels like it's going to be any moment at this point. But you make a great point, right? We've had this downdraft in terms of the market and then this rip higher in the last, they call it, day and a half of trading. And a lot of people are asking the question, what is the real trend? I don't think we can ascertain a real trend from these last 2 days or even from the last 4 weeks. There was a lot of consolidation and profit-taking, rotation in terms of participation over the last couple weeks. The big point here and the big message for investors is that there's always volatility before an election, and particularly in a year like this where we have so many cross-currents between the virus, questions around economic activity, relationships and foreign relationships with other countries. There's so much for an investor, whether it be retail or institutional, to take in, that you should expect some volatility going into year end. Now, the good news is this volatility can provide amazing opportunities to increase the size of positions in industries and in sectors where you feel like you're going to be able to, own the secular winners, companies with earnings modes that are digitally transformed, and that really have the ability to grow their revenue regardless of the economic cycle.
Well, I tell you what, Joe, it's easy to forget, but in the 15 or so months heading into the 2016 election, the market, as you remember, did squat. I mean, literally, we're like, well, the Dow's up 4 points today. The market just did nothing for the better part of a year. Why the increased volatility this time around?
Well, I think it's a collection of macro conditions that are impacting the market. I agree with Kate. Yes, it's a lot about the uncertainty surrounding the election, but I also think it's the increase in Chinese-U.S. trade tensions, let's not forget rising virus cases both in India and the UK, and also the impact from the fixed income market as it relates to where rates might go. So I think it's a collection of these macro headwinds that are impacting the market. Yes, today is a very broad-based rally. I believe 95% of the S&P 500 is higher. That's a very strong number, probably the best number we've had since December of 2018. I think within the Dow itself, there's only two stocks, Merck and Walmart, that are lower for the day. But there's been a 4-week slide, as you indicated, Brian, from 35.88 down to 32.09 on last Thursday. That's a 10.5% slide. And I think how investors now have to be thinking about that is that looking forward, you're still going to have the volatility. So maybe most of the price damage has been done. And now it's about a little bit of we've got to mark some time into the earnings season to really see if we're going to be able to have a V snapback and go back and challenge that 35.88 again. I don't think we do. I think we trade here between 32.75 and 34.25. And I think the VIX being higher on a day where the market is so strong is kind of indicative of that. And I'm sure Pete will explain to us the reasoning behind why we see this higher VIX today.
Asian culture and
well, that's it. It is higher. Okay, Pete. So I feel like the VIX is the Minnesota Vikings.
They've only been around.
They're kind of good, and every time you think they're going to break out, they do something dumb, and now they're 0-3. And the VIX is kind of like that, right? It's up. It's at 27. It's not at 12, but it's not acting like we're going to have this major contested election and huge volatility. It's not at 40. How do we read this sort of weird level for the VIX?
Launching Vice's electronic
Well, I think you have to go back to the fact that everybody loves to talk about the VIX, and Joe understands it very well that he doesn't have this thought. But I'm telling you, so many people think that the VIX is the fear index. It is not the fear index. It is a measurement of expectations going forward. But where were we? What kind of movement have we had? We had that monster move on Friday, right? We had 360 points. We went off the lows. We accelerated to the upside. The velocity was unbelievable across the board, whether it was NASDAQ or Dow or whatever. Today, same sort of a reaction, although we're seeing the Dow very much outpace right now, at least the NASDAQ. So a nice, big, powerful move. We were up 500-plus points. That gives you close to a 2% move. You know what a 2% move is on the VIX? It's about 32. So the fact that we've moved up a little bit says to me that the volatility is there. It's increasing because the movement that we are seeing warrants that increased volatility. And so I think that my recommendation would be you use that volatility when you can. In other words, oftentimes we talk about different ways to trade the markets. When the volatility is higher, I tend to be a person who's more apt to be buying stocks and selling premium. And at other times, when the volatility is low, that's when you're buying more and more call options and put options. And using that to your advantage. So just keep an eye on it. 27, we start to break out a little bit. We were over 30 twice last week, two different occasions. So it's not like we can't possibly go over 30 again. We absolutely can. We could even go a little bit higher. But it's all about, you guys are talking about the macro. The macro is huge because it is about the virus. It's also about the vaccine. It's also about the elections. It's all of the above. So there are a lot of different factors playing in right now to the markets.
In the form of a Twitter friendship.
Yeah, there certainly are. And by the way, you went 30 seconds past the bell, the world's loudest text message symbol there as well. Tiffany McGee, let's get now into that because it is a smorgasbord, really. I heard something, maybe I'm just going insane because I wake up at 2:50 in the morning. Tiffany McGee, when you look at what Pete just mentioned, right? You also have the other things out there. By the way, China, the increased tensions with that country as well, perhaps not getting attention it deserves because of A, the virus, and B, everything else that we just talked about. If you had to sort of rank your macro concerns, what are those worries?
Immediately went viral.
Everything was so first of all, that was actually me. That was my dad texting me, asking me if I was on TV today. So yes, Dad, I'm on TV, but I just muted it. Thank you, and happy birthday to my mom, by the way. Thanks. So yeah, I think we've been talking about all of these macro issues that are going on. And first, Pete is absolutely right. The VIX is a kind of like a future is an indication of future expectations. And I don't think that markets have really learned to predict elections yet. I think that we learned from 4 years ago when everybody was so sure things were going to go a certain way. I do think that we see volatility as, as every little event during the presidential cycle happens, and that has always happened. But again, we are in this really unprecedented time where we've never been in a global pandemic. We are in that now. We got news last week that it probably won't be until April 2021 before we get a vaccine in wide distribution. So that's an issue. And then so many Americans are struggling economically. Our economy is really struggling, and we don't have any hope right now of a stimulus. So where do you go? What are you thinking about? And I think we kind of came out of this time where everybody was at home. There are more retail investors getting into the market than ever before. This year it's about 20% of retail investors. Last year it was 10%. And so they were at home, playing the markets because it was a cool thing to do. And now there's some volatility. And I think, retail investors react to those things in a way that institutional investors don't. And we're seeing some of that go on right now.
Doing more videos like that. It's just like,
yeah, we bought back, Brent. First off, happy birthday to your mom. And your mom may be a good peg for my question for Bryn, because there's so many things we want to do, but we can't, right? You want to take your mom or dad out for dinner for their birthday, and maybe you just can't, or you just don't want to be around them because they're older and there's risk and whatever. But, Bryn, I get this idea when you study history that the Roaring 20s were not about the war. It was about the end of 1918, which is far worse than this. We all know that. But I wonder if there's going to be sort of this rush of spending as we all sort of bust out in 2021, and the market has maybe priced that in already as we all just look to try to book a flight right now, by the way. Flights are incredibly expensive next year on the anticipation of great demand.
Emerging talent around the world.
Yeah, well, I mean, I think, earlier this summer, Satya Nadella, the CEO of Microsoft, had this very memorable quote where he said, we've seen 2 years of digital transformation in 2 months. And what I think when I'm reflecting back, looking at history of this year, well, we've also seen probably 2 years of multiple expansion in a lot of names as well. And so I really agree with, Joe and Pete especially about, I think the markets are range bound right now. I think the highs that we saw the first week of September are probably in for the year. I don't see NVIDIA racing back up to 600 unless SoftBank starts buying more calls on the stock. But I think that investors need to, settle in. I think the debate tomorrow night is incredibly important. I think that the expectations for, Joe Biden as a debater to hold his own are low. I think if he does better than what's expected, then we'll see if we see some type of, rotation whatsoever, because obviously there's certain sectors like energy, and you would assume more financial regulation with the Democrats. And so I think tomorrow night will be probably one of the most heavily watched shows or debates in history, and I think it's somewhat set the narrative going forward up until the election. But I definitely think this is more of a trader's market right now, and we have to, know what you own, know what catalysts are coming out there before you're just going to continue to buy Zoom thinking it's going to go up and expand multiples after it's already had just like an incredible year already.
Something changed, and I was
very quickly, Brent, a follow-up for that on the debate, because Biden's already leading in the polls. Now, whatever you think of the polls, I get it. They were wrong. They were really wrong in 2016. A lot of people believe they are wrong now because that shy Trump voter. It sounds like what you're saying is you think the race is tighter than maybe the polls suggest. So if Biden is able to pull it out and have a good debate, he might extend that lead or solidify something. And that, from an investment perspective, you'd maybe have to, sell the shale companies, things like that.
Well, I'd hope not. We'd rather be buyers of the shale companies, but I think that's just a directive that as we get closer, I do think it's a close election. I think that the Trump voters are a quieter group, and that we'll see what happens. But I do think from an investor standpoint, you need to be nimble, have your core positions, but I do think it's a good environment where you can, trade the names. And also, you have seen definitely an expansion of some of the epicenter names. The airlines continue to make higher lows, and not that they're making higher highs, but higher lows. And so I do see you're seeing an expansion of some of these, we'll call them epicenter names outside of tech. And I do think that if you can hold your nose with a lot of different areas in these epicenter names, that's probably the easiest money to make versus just camping out in tech, thinking that what's worked this year will continue to keep working.
Tickets sold out.
Got to correct. Don't hold your nose because we're not supposed to touch our face. There's a mask over the nose. Bryn talking. We're going to see you in a couple seconds. All right. Let's step out of this conversation for a moment because even with the last 2 days' gains, it's been a pretty lousy month for most stocks. The S&P 500 down more than 4%, and the FANG names are down an average of 10% in September. So, did this September swoon accomplish what market corrections are supposed to do? Let's ask Mike Santoli, who wrote about it, just that, on CNBC.com. Mike, did it accomplish that idea to flush things out, clean things up just a bit?
Yeah, Brian, I think we did. At least it went far along in that direction, if not completely. I don't think you can ever sort of say, yes, it's complete. But if you thought coming into September, as most people did, the main hazards or liabilities in this market was really overconfident trader sentiment and positioning, and just big tech stocks in particular, big growth stocks that had risen to these kind of gross extremes, gotten overshot to the upside relative to their trends. I think they have been reset lower in a way you can observe in things like the fund flows out of equity funds in the latest week, in things like surveys and things like a very large short position in NASDAQ futures that has developed really all out of the blue into last week as well. So I do think you've sort of skimmed away a lot of that froth. At the same time, you haven't seen the market kind of seize up in advance of new economic stress. So you have not seen the credit markets lead stocks lower. They've kind of gotten a little bit ragged, but they're being, actually very strong today. You've not necessarily seen treasury yields run to new lows. My point there is that the equity market pullbacks seem mostly about the equity market. I'm definitely not going to oppose the idea that, we're still maybe chopping along here. You can't declare that after 2 days somehow